Welcome to a new episode of the Commodity Supercycle. Today with the one and only Willem Middelkoop. Willem, hi.
Well, thanks for the invitation. Sorry I can't be in Germany. I'm in France, the south of France right now. I needed a little break after an incredible year. So that's where we are now.
Yeah, no problem. Enjoy your vacation. Thank you for your time. I'm really honored actually that you take your time talking to me right now. We know each other for a long time. We were following each other on Twitter and everything. I definitely have to recommend your Twitter account. I will put it in the show notes. And one day we have to meet in person. Definitely. I think it will be a blast. So you're the founder of the Commodity Discovery Fund and also a best-selling author. You have been writing about the world's financial system since the early 2000s, so really, really early actually, and you saw the mistakes and you predicted some crisis actually. So you predicted the credit crisis in 2007 in your first bestseller. So you also wrote a second bestseller in 2014. I read it in 2015 in English, and The Big Reset. Yeah, it sounds familiar to the World Economic Forum and Klaus Schwab's The Great Reset. I think he copied you, so you should get some money from him. It's called The Big Reset, War on Gold and the Financial Endgame. So not to confuse, of course, with The Great Reset. It's a different topic. So at first, let me ask you something about this great book you had. And there's also now a German translation. I have to recommend it, and I will also put a link in the show notes. It's der große Neustart, Krieg Gold und die Zukunft des globalen Finanzsystems, published at Wiley. And in your book, you predict in 2014 already that the reset of the financial system seems imminent, actually. Maybe even before 2020, you wrote. For now, no reset occurred, like we see. Yeah. Have you been wrong, or was just the timing bad, or were you too early?
In the summer of 2019, Marc, who was the governor of the Bank of England, he made a very famous speech at Jackson Hole. Jackson Hole is the most important conference by the Federal Reserve in the US. And in the summer of 2019, he said that we need to find a new anchor for world's financial system. We need to find a successor for the dollar. Well, that's the main thesis of the Big Reset. The main thesis is we need to find a successor for the dollar. We also need debt restructurings. Well, Joe Biden is talking about debt restrictions now for the student debts. The IMF is talking about debt restrictions for the poor countries. And I also said in the Big Reset, there's a third part of this financial reset, this monetary reset, which will be needed after finding a new anchor for world's financial system and the debt restructurings. And the third pillar is we need a reevaluation of gold. We need to bring gold back into the system, probably because central bankers will start to print too much money and people will start to lose trust in the financial system, and people will start to flee towards hard assets. And I said on the back cover, this is all about to happen around 2020. So actually, I'm getting more and more right. It's very hard. The timing is always very difficult. But I think when we look back in 10 years, when we look back in 2030 or 2035, we will agree that in the last 10 years, so many things have changed within our financial system. And this is not a reset, is not a binary event. I called it a Big Reset, and it's a bit marketing. And when you write a book like this, it's like you tell people that at a certain Sunday afternoon it all will change, but that's not the way monetary resets work. So this is a process, and I think that the next few years we will understand that many things have changed, and we're in the process already. The IMF said we reached a new Bretton Woods moment. Well, Bretton Woods was the start of the current dollar system. So there's so many signs now that things need to change. And there was a report by one of the larger Wall Street banks in which they said that the institutions like the World Bank and the IMF need to be reconstructed as well. So we are in the reset process. It's not something which will happen in a few years' time. We're in the process now. It's happening as we speak.
Yeah. I made the same or similar prediction actually in my last book in 2019. I said we will see a historic paradigm shift. We are in the middle of the fourth turning, which started 2008, and my prediction was 2023. I said why? Because there were some debt problems we had in Italy, for example. We saw the central banks printed more money than ever before, and now it got even worse with Corona. So we will see. It's always the timing is hard. The question is not if it happens, the question is when it happens. Perhaps we're wrong about 2-3 years, we will see. But for me, it's definitely safe, 100% safe that this monetary system will fail. So what is in your mindset? Why is this monetary system we have right now wrong? Why will it fail?
Well, in the big reset, I ended the book with an appendix, and that's a list of all monetary systems we've had in the past. So in the last 300 years, we've seen 250 different monetary systems or currency systems.
Yeah.
All of them failed in the end. The Dutch guilder was one of the most successful ones. The Dutch guilder was around for 188 years. But if you study world's fiat money systems, so when you are not gold-backed or asset-backed, these currency systems always fail. So why would the 255th fiat money system be successful? So it's a guarantee that a fiat money system will fail. And what we're seeing now, and it wasn't that hard to predict that this fiat money system would see huge currency debasement and loss of trust, and actually it's happening now. So central bankers are aware of this as well. Central bankers are just like myself, students of monetary history, and they know they can play a few tricks to bring back the trust into the financial system. And one of the very few things they still can do is to bring gold back into the system, revalue gold. And this has happened before. It has happened in the 1930s. And I don't think we'll go back to a full gold standard, but we need to do something, or central bankers need to do something to bring back the trust into the system, because trust is disappearing. And you're German yourself, and I've been reading a lot. Actually, I've been rereading The Death of Money about the Weimar hyperinflation. And I would advise everybody to read that book. It's a very important book. And at the start of hyperinflation, it all feels good, actually. The real estate is going up, the stock exchange is going up. There's a lot of economic activity. At the start of the Weimar hyperinflation, there wasn't enough labor around. We see the same now in the US. And I think we're in the very early stages of the process leading towards hyperinflation. I'm not predicting we'll have a hyperinflation in 2022 or 2023, but we're in the very early stages. And if central bankers would continue this way and don't bring gold back into the system, they might start to lose full control over the system. And that's the scary part.
Mm-hmm. What do you think? Will the central banks, will the World Bank, the IMF, will they be voluntarily change the monetary system, or do we need a crash so they have to be forced, or they try to transform the system within the crisis right now? What's your take on this?
I think central bankers are very much aware of what's happening. Often you need a crash to increase the pressure on them to act. But I think the stock markets are of such almost of a national security interest, especially in the US, that as soon as markets are starting to drop, and we have seen that in Q4 of 2019, we've seen that early in 2020 during the Corona crash, central banks will do everything to bring stocks back up again very quickly. So they just print more money. So I think the changes coming to the system, and we already see that happening, are they can be done without a large collapse. maybe 10, 15 years ago, I was of the opinion as well that we first needed a total collapse of the system before we could start to build a new system. But after studying this topic more and more, I've learned that you can change the system without without a full collapse first. So you can bring gradual changes to the international monetary system. And one big example is currently much work has been done by the IMF by enlarging the amounts of SDRs, the special drawing rights, the IMF currency basket, and they want to upgrade the SDR currency basket so they can use the SDR as a successor to the dollar. And so you don't need a dollar collapse first before they can make changes like this. We can agree within the G20 or within the IMF that we'll use the SDR to price oil and other commodities. This can be done without a collapse of the dollar. And the pound sterling, which used to be the world's reserve currency before 1914, the British pound is still around, you know. It lost in value in the last 100 years, but it didn't collapse totally. So people who are waiting for a full collapse of the dollar, I think, will be surprised that's not about, I think, going to happen.
Yeah. So yeah, you've been very vocal about the SDRs. May you explain them to our audience, and why do you think they are so important in this process?
Well, the SDR is a bit technical, so it's not well understood. The SDR was created by the IMF in the late 1960s, and it was created because the IMF was afraid of a coming dollar collapse. Yeah. Because, of course, the dollar was gold-backed since 1944, and it was quite clear to insiders that more and more countries, especially from Europe, were calling the US for their gold-backed dollars. So they returned surplus dollars to the US, and they asked physical gold. And the French even sent their navy to Manhattan to collect their physical gold. So insiders knew that the US was losing the physical gold holdings on a very rapid pace. They lost over 50% of their 20,000 ton of gold holdings. So in August 1971, President Nixon took the US off the gold standard. But insiders know this was coming, like the insiders now know all these changes will come. So they started to build a successor for the dollar. They started to build a IMF currency called the SDR. And it was never needed, because once the US took the dollar off the gold standard, there was a short-lived panic, but they could restore trust in the dollar system. And now people are used to an unbacked dollar. But the SDR was created to be a successor for the dollar. And in the last 10 years, especially after the Lehman crisis, especially the Chinese have been pounding the table that we should upgrade the SDR, because the SDR would be a perfect successor for the US dollar as an anchor for the world's financial system, because the euro is not a good currency to become the world reserve currency. The Chinese currency, yuan or the renminbi, is not a good currency because there are no open financial markets. And so the SDR, in which the dollar has still the main part, there are 5 currencies in the SDR basket. One is the dollar, it's over 40%. Then you have the euro, the pound, the yen, and the renminbi has been added to the SDR in 2015. So this shows you they have been promoting and upgrading the SDR so it could be used as a world reserve currency. And now when it's getting interesting, because after the Corona crisis, the IMF now decided to allocate an extra 600 billion SDR to all member countries. And this is the first real big issuance of SDR. And of course, it's a new layer in the fiat system. Yeah. But by increasing the SDR and the amount of SDRs around, they can make this a more liquid market. And they even have been advocating that the IMF would have a substitution account in which member countries can send their current dollar treasury holdings and get SDR holdings as a substitution. So in this way, you can change the large dollar, the US dollar treasury markets into a larger SDR market. And then the SDR becomes liquid enough to become a real successor for the US dollar.
Cool. Yeah, that's a very good explanation. Yet for skeptics always say there will never be a gold-backed or partly gold-backed currency again. What's your opinion about that, or what do you imply?
Well, I know these critics. I read them as well. But I always say don't listen to what central bankers say, but just watch what they do.
Yeah.
I just saw a note here on my Bloomberg that Brazil has been buying a few extra tons of gold. Yeah. And in the last few years, we've had over 25 countries in which the central bank was buying physical gold for their national reserves. So when central banks are all buying physical gold, and they're not buying Bitcoin. I like Bitcoin from a personal portfolio management point of view, but central bankers are not buying Bitcoin. Central bankers are buying physical gold. So if all those central banks are adding to their physical gold holdings, they might know one or two things about the future, because they discussed this within the IMF. And if you study history and if you think logical, it's very clear that a revaluation of gold, bringing gold back into the system, one way or the other. I give several examples in my book, The Big Reset, about studies which have been performed in the last 10 to 15 years, what the effects would be to bring gold back into the system. And then, central bankers are thinking about this. And when you study history, this is one of the very few things left for central bankers to restore the trust in the system.
Yeah, I'm with you. I'm totally agree. I think we're on the same page with this topic, because we see central banks all over the world buy, after the financial crisis, since the financial crisis 2008, in record amount gold as a safe haven, actually, against inflation. Either they don't trust their own product anymore, fiat money, or they know something, what's happening, what's coming up. So
they're hedging themselves. They're hedging as well,
of course. Yeah, they're hedging, and now we see Basel III as well. So what do you think? What impact will have Basel III? But before that, you mentioned Bitcoin. Do you see any role of Bitcoin in this topic for the future? Will Bitcoin be a part of the new monetary system?
I doubt it. And why? It should be part of a new system, but central bankers will never accept to have a currency like Bitcoin, which they can't control one way or the other, to play a major part in a financial system they want to control. And that's why they would prefer to add gold back into the system to Bitcoin, because they can control gold much more than Bitcoin, and
manipulate.
They always owned. And they always owned most of the gold. And it's much easier for them also to get hold of the gold being mined worldwide. And it's much harder for them to get hold of the Bitcoin being mined worldwide. And there's not too many Bitcoins to be mined in the future, because we already have mined 19 out of 21 million Bitcoin. So I think there was a recent survey that 15% of central banks said they would like to experiment with Bitcoin. But that's more because they want to introduce their own central bank digital currency, and they want to look how Bitcoin is performing. So if they're going to buy Bitcoin, it's more to build a system like that. But if you study the central bank digital currencies, the Chinese have been introducing a system already. ECB will later this month introduce the new digital euro. And the Federal Reserve is working very hard. But if you study these central bank digital currencies, they are also a new layer of fiat. It's not a cryptocurrency. Maybe they will use a wallet. It's digital, but it's not like Bitcoin. And you know what I'm talking about. These are different worlds.
Yeah, definitely, definitely. I think they introduced the digital currencies, the CBDCs, for more control, more surveillance, and of course, negative interest rates, because they know fiat money is at the end, actually in the end game, and they want to put some more life into it for a couple of more years to survive and to have the privilege printing money and slave the people, actually. So, yeah.
But there's one more reason. There's one more reason
one?
they want to introduce the central bank digital currencies. It's a way in which the central banks will be able to put stimulus money, liquidity into the system, surpassing the commercial banks. Because the commercial banks, their balance sheets are stretched. In the next crisis, commercial banks will have many, many losses on their balance sheet, and they won't be able to, to give new debts to many companies. So if you have a wallet with the central bank, you can have a direct line of support and credit with the central bank. And I think that's an important reason as well. So if we talk reset, these are steps within a reset, that we all get a wallet with the central bank. These are that's a major overhaul of world's financial system. So if you study the monetary resets in the past, in 1971 and 1944, we always had these type of changes, major changes within our system. And I think we'll get a major change within our pension system as well. And all these changes together, if we look back 10, 20 years from now, we'll say, oh, that was part of the big reset or the great reset.
Yeah, definitely. Yeah, it's a wild time we're living in. It's historic times we're witnessing here. So talking about Basel III, what do you think? What's your take on the Basel III thing? Because we saw they want to delay it, the LBMA delays it till next year. So what's your take on this?
Yeah, I've had this question many times. Sure. And in the last few months, I always said that I don't think it will be the big game changer, but it's an indication that gold is becoming more important again. If gold wouldn't be important to the financial system, they wouldn't be talking about these changes, how to value gold on national bank balance sheet and commercial bank balance sheet.
Yeah, perhaps maybe you explain it in short terms. What is the Basel III thing with gold? And yeah,
well, it's about how to value gold, physical gold versus paper gold holdings on the balance sheet, and the amount of risk is connected to the physical gold position or the paper gold position. So I think within the Basel III agreement, we're quite sure now that physical gold is a safer investment than a paper gold investment. But I was always a little skeptic whether this would be the beginning of the end of the manipulation of the gold price, and if this will be the start of a total free gold market. And we have seen that they decided already that certain banks, systemic important banks, are excluded from the new Basel III agreement. So this shows you the tricks being played in the gold market. They just continue, whether it's Basel III or not. But once you start to manipulate prices lower, and they have been doing this with gold for decades, and if you study the London gold pool, which was an agreement among Western central banks to keep the gold price fixed at $35 an ounce in the 1960s, that one fell, and then gold broke free and ran to almost $900. And this manipulation will fail again. I think there will be a revaluation of the price of gold by market forces or by a decision of central bankers that they decide to revalue gold to a much higher level. And that's part of the reset thesis I wrote about in the book. So I wouldn't be surprised when central bankers within the IMF or the G20 will come with an announcement on a Sunday to say from Monday on, we will be buyers of physical gold for $6,000-$7,000 an ounce, and then the price of gold will be revalued in one big step. That can be done. It has been done in the past, and it can be done again.
Yeah, we already talked about the fourth turning, about the paradigm shift we're living in. So how will such a reset play out in reality? What's your take on this? Will we see chaos, civil unrest, or a smooth transition? What do you expect and why? And we wrote a couple of times, and I think you very often in the Swiss Alps. Is this your hideout or your exit strategy?
No, well, I was born in Geneva, so I always feel at home in Switzerland. Cool. So I'm now in the south of France, but we have a chalet in Switzerland. Right there, the chalet is, I live among farmers up on a hill, and cool. It would be a perfect hideout when chaos arrives.
I'm coming.
I'm not waiting for chaos. Well, I think we'll have difficult times ahead, but I'm not expecting a full collapse of the system, and that's not why I have the chalet there.
Okay.
But when you study the past, and I've been rereading The Fourth Turning also again. It's a book from the 1990s, and the fourth turning is that every 80, 90 years you have this big change in society. We had a revolution around 1917 worldwide, start of communism, and every 80, 90 months you have these big changes. But just like monetary reset, these larger resets from a geopolitical point of view or political point of view, sometimes it starts with a war, or sometimes starts with a crash like 1929, but it never runs the same scenario. So you should be aware of large changes coming. You should be aware of a lot of volatility coming. You should be aware of paradigm shifts. Yeah. But the way we approach financial markets and the way we approach assets, we are always planning our assets and our assets portfolio management strategy with these paradigm shifts in mind. And that's why I have 25% of real estate, 25% of physical gold and silver, 25% of equities, 25% in cash / Bitcoin, because you're never sure what's going to happen. Banks might close, stock exchanges might close, but you're never sure what will happen. You can have a deflationary collapse, you can have hyperinflation. So you should adjust your portfolio to such a system that every of these scenarios, you can survive each and every of those scenarios. And I'm not sure what will happen. I don't think we'll have a full collapse. I think we'll have major changes. We'll have a lot of volatility. And I spread my money from a wealth conservation point of view, and I think you do the same. And that's what people who are well off, that's what they should do, and not start to speculate on each and every trend in the stock market.
Definitely. So there will be hard times in front of us. So when the central banks and the politicians are desperate, what do you expect? Will we see more socialism, more blend in central economies? What's your take on this?
Yeah, I was thinking about this this morning when I woke up. One thing is sure, we'll have more money creation. Yeah. The money creation, the debasement of currencies has gone into overdrive, especially since the start of Corona crisis. Yeah, I think Corona is here to stay. Whether we're vaccinated or not, there will be new types of Corona. So the economy needs support for a longer period of time, and that's why we need the central bank balance of the central bank digital currencies. So one thing is sure. More money, more currency debasement, more money printing. And when you have more money printing, you have more government control as well. So if central banks create more money, they can decide who survives and who will be killed. So, and it will be very dangerous to fight the government, to find the central banks. And we're highly connected to central banks because we became part of the OMVIF. The OMVIF is a London-based think tank in which central banks and the private sector meet. We're one of the sponsors, so private companies. We have an investment fund. So the Commodity Discovery Fund is a sponsor of the OMVIF. And because of this, we can listen into the meetings. And I think it's very important that you're well connected to the central banks because central banks, they work silently, and often there's a lot of secrecy involved in all that planning. But if you study central bank studies, reports, seminars well, you know pretty well what's going to happen. So it's part of my job to be a central bank watcher. So the central banks and government will become more and more important. So it's very important from a personal level that you should work on several scenarios, like I do myself. I have a base in the Netherlands, but I also can be in Switzerland. And last year proved very important that you can drive with your own car to your second home. If you need an airplane, you're much less flexible. And I would love to have a third base somewhere in Asia as well. And of course, I'm
long road trip.
I'm very fortunate. Yes, that's a long road trip, but maybe store some of your assets in Asia could be very interesting. I'm in touch with a company in Singapore. You can store there your physical gold, silver, but also nickel or whatever, and you can also store the Bitcoin there. Yeah. So these kind of solutions could be important for people who have more net worth than average. But I think we're very fortunate we can live this way, because most of the people can't plan their lives because they just have one income and they just have a family and they just can't afford just one home. And I can imagine that many of those people are getting a little nervous because they see so much strange things happening. In the Netherlands, it's almost impossible to find an apartment. You know, there's such a shortage in housing now, especially now. All investors are starting to buy real estate as well. Many problems inside, but I don't think we'll get a full collapse. Okay. I'm not in the collapse camp. I could talk with you about this topic for hours, and I definitely will invite you a second time. We talk about the monetary system and all the implication it has. So, but now let's talk about the preparation for the reset in a financial way. So, how can people prepare themselves with their money? So, you have been an investor in commodities for several years already. You run your own fund. So the series is called, the commodity super cycle. So what do you think? Are we in a commodity super cycle in the beginning, at the middle, or at the end? Commodities is just like Bitcoin, like Max Keiser always says. There's no limits to the price of Bitcoin because there's no limit to the amount of money creation. And the same goes for commodities. And the great thing about commodities is, and I was very lucky to see this. Well, over 15 years ago, I started to invest first in gold and silver and then into commodities. I learned that commodities, we can't print commodities. You can't print copper. Yeah. So when there's more and more money created and money is being debased, the commodities, which are getting scarcer and scarcer, because we have a commodity discovery fund. We are specialized in the discovery of commodities. So I know firsthand how difficult it is to find a new copper mine or to find a new silver mine. And when you have valuations at a 100-year low, commodities against the S&P 500, the valuations is at a 100-year low. Yeah. So if you can buy these assets now, pennies to the dollar, that's for the long run, that's a great investment. And I think we've turned the corner now. We saw the deepest crash for commodities was March last year. If you look at the valuation of commodities against S&P 500, was actually a new low in Q4 last year because the S&P was running up faster than the commodity index.
True.
So you can buy at a 100-year low. And we have seen a huge run. Our fund is up 180% since March last year. Our assets under management is up 400% since March last year. So people are starting to wake up, and we used to need to call people to attract investments, but now they call us. We hardly don't do any marketing anymore. So people are starting to wake up, and I think a lot has changed since March last year.
But don't you think it's a contrarian indicator if people call you right now, so we're at the end of the commodity super cycle, or you think it will go on for a couple of years?
No, because first there was maybe only 1 in 100 who was seeing all these changes coming, and who was well, you know it yourself. You were a lone wolf, advising to buy gold and silver. And even in Germany, where people lost all their money 3 times in the last 100 years, when they would have had only fiat money in their savings account. But even in Germany, it took time for them to wake up. And maybe after the Lehman crisis, it wasn't 1 in 100, maybe it was 5 in 100 who woke up. But now after the Corona crash, and people see the money printing and the negative yielding interest rates, I think 15 or 20 out of 100 are starting to look to hedge themselves.
Yeah.
But we will only reach the top in this commodity cycle when 75% of all money wants to be related to hard assets investment or quality related investments. And if you look at the broader investment funds, if you look at the general equity fund, they still have less than 1% in commodities, less than 1%.
Yeah, true.
So we've got a huge run ahead of us. And I always say it's like a train. The train started a few years back, and we were the first on the train. We were almost driving the train, but now the first cabin of the train is getting filled, but the rest of the train is still empty. And we know where the train is heading. The train is heading towards more currency debasement, and we don't know where the train will stop, but it's still early to jump on that train.
Okay. Yeah. So I checked up your fund, and gold miners are by far your biggest positions with 62%. But you invest in several other commodities as well. So which other commodities beside gold are you bullish on for the coming years?
Yeah. One little correction, our gold-related investments is 60%. And then people often presume that's gold miners, but we prefer the gold exploration companies.
Okay. All right.
So we prefer to invest in companies who have more gold ounces in the ground at the end of the year than at the beginning of the year. And if you're a producer, you have less ounces available at the end of the year. Yeah. So we have some producers in our fund, that's only 10%. But we concentrate on the exploration place, so the larger gold discoveries. So that's 60%. 15% of our investment is silver related, especially silver related exploration. So companies really discovering the silver now. And then we have around 5% is uranium related. And then the rest is base metals, so copper, nickel, and zinc. Okay, very interesting. So do you have any insider tip for our viewers? One stock you say, I'm super bullish, you have to have this one for the next couple of years in the long term? I'm always very hesitant to name one stock, especially when it's an exploration company. Okay. But I'll play it safe. I will play it safe, and then let's turn our attention to the streamers and the royalty companies, like wheat and precious metal. We have Royal Gold, and these companies, they get their income, their streams from dozens of different mines, gold and silver mines. They're very reliable, they're very safe, and they all had a correction because we had this correction since August last year. They all came down quite a bit. So if you look at Sandstorm and wheat and precious metals, they're all quite well. The entry point is quite good now. Okay, and that's a safe way to play this sector. Yeah.
Okay, cool. So location is one very important metric when to pick the right mining stocks, in my opinion. So how do you go about that? Because when I check your portfolio, I see your investments are in rather safe jurisdictions.
Yeah, we concentrate on companies which are listed in Canada and also in Australia. But sometimes these companies are listed in Canada, Australia, but their project can be anywhere in the world.
Sure.
There are only a few countries we really avoid. We don't like Russia. You're never sure what the Putin crowd will do, when there's a big discovery.
Before the internet collapses or the market crash, let's finish up with some rapid fire questions, Willem. Gold or silver?
Silver.
Okay.
Silver is gold's little brother.
Okay, cool.
The supply and demand for silver is much more interesting than gold. Silver is the only metal which is still valued a lot lower than in 1980. So silver will have a huge run in the next decade.
Okay, cool. Bitcoin or gold?
That's a tough one. If you can only buy one, gold is the safest. Bitcoin will make you the most money.
Okay, so what's your price prediction for gold and silver and Bitcoin in the next couple of years or end of the year? Let's do end of the year and then next 5 years.
End of the year is very difficult, but in 5 years' time, gold will be around $5,000 or over $5,000. In 5 years' time, silver will be around $100, over $100, and in 5 years' time, Bitcoin will be over 100,000. And might shoot up around to around 500,000 or 1 million.
Okay, cool. Beer or wine?
Normally wine, but the only country I choose beer is North Korea. I've been to North Korea twice. Oh. They don't have good wine. They have some sake, but I thought the beer was pretty good there. So in North Korea, I drink beer.
Okay, cool. You've got a favorite silver mining stock?
My favorite silver mining stock is very difficult because there are very few around.
I know.
But I would choose wheat and precious metals.
Okay.
I would choose wheat and precious metals because they have this wonderful royalties coming from dozens of different silver and gold mines. I think that's the best pick.
Okay. So what do you think? Is the general stock market in a bubble?
If you look at the ratios, just the facts, there's a clear bubble. There's a clear overvaluation on the general stock market. If you look at the valuation of commodities, there's a real undervaluation. Valuations can always get to more extreme values, and especially in a debasement of currency scenario. I can see the general indexes even move higher, but then it's getting very, very risky. Very risky. So I think in the next run up, you should lighten it up. It's a melt up. We will see a melt up. It will be inflationated by the central banks printing more money, and then there will be a nice correction, I guess. So the last question for this interview, and like I said, I will invite you definitely again because it's so interesting talking to you. The time flies by like nothing. Is something totally different. It had nothing to do with money, commodities, or gold. It's about the meaning of life. What's the meaning of life for Willem Middelkoop? Opening as many doors as possible to luck. And that's what I do financially. That's what I do, with many other aspects of life as well. So, and I'm always surprised that people aren't opening more doors to luck. Well, they buy lottery tickets, but that's I don't think that's a smart way to open a door towards luck. And that's make yourself more happy. And you should stop doing the things which make you unhappy, and should start happy. And it sounds very simple, but most people have they think it's very hard to do.
Yeah. Perhaps the big reset.
That's what I try to do.
Yeah, perhaps the big reset is also a door to luck, I guess. So, William, I thank you again for your time. It was great. And I will definitely put the link of your Twitter handle and the link to your books in the subscription. I can recommend to everybody to read a book and to follow you on Twitter as well. And yeah, it was great talking to you. See you soon again.
Thank you so much, Marc.